let's take a look at clearance rates, auction clearance rates around the country over the weekend. Starting with Sydney, there were 348 properties that went to auction. The clearance rate here, pretty strong. You can see 88%. On top of that, across New South Wales during the week, more than 1,630 homes sold via private sale. Melbourne had the most auctions, 568. Again, the clearance rate staying high, 85%. There was on top another 1,380 homes sold via private treaty during the week. Brisbane had 46 auctions. The clearance rate here lower as it normally is, around 74%. But around Queensland, another 1,280 properties sold via private sales. Adelaide had 37 auctions. The clearance rate here 89%. But on top, 400 homes were sold through private treaty. Lastly, Canberra, 61 properties went to auction. The clearance rate strong here at 92%. Another 70 properties were sold privately. Let's get more on this with Angus, Economist with REA Group, who joins me here. Angus, many thanks for your time. As always, you've noted that the trajectory of home prices is starting to just taper off. That's inevitable. It can't stay at 20, 25% forever. But the one thing you're seeing out of those auction clearance rates is that the appetite for people to continue to buy and banks to lend is staying there, isn't it?
Absolutely right. So we had our home price index out last week that showed prices grew 0.3% in March. It's fair to say that's slowing. So, that's the slowest monthly growth rate we've seen since May 2020. That's not surprising. 2021 was the third fastest year of property price growth in 140 years. It'd be surprising if we kept that up. It's also not surprising given that we're expecting to see interest rate rises later this year, which is presumably slowing price growth. But on the auction side, we are still seeing quite a lot of activity. This weekend and the weekend coming will be quite busy as people look to sell before people go on leave for Easter and Anzac Day.
So it's always going to be supply and demand. So if there are more properties coming to the market as people try and test the market to see whether they can get a top price for their property, they've also got to have somewhere to go to as well. So in many cases, people are just using the same market to trade up. And so, it's actually a part of the timing. But the more properties that hit the market, the more that price growth is likely to taper off.
Exactly. And we've certainly seen a lot of churn over the past couple months. The pace of sales has been quite strong this year. It has slowed a little in the past few weeks compared to where we were in February. Again, that's not surprising. February was very, very busy, so it'd be surprising if we kept that sort of pace. But, and we're tracking a little below where we were in 2021. Again, not surprising. 2021 was unusually busy. So strong, but slowing a little.
And there's one aspect of affordability that probably it's a bit too early to talk about too much, but that is as wages start to rise or as people change jobs and get wage rises, their ability to afford more home becomes also greater. As you've got two incomes coming into the workforce, your ability to afford a home becomes greater. So that's a part of the dynamics of home loan affordability.
Absolutely. So wage rises will help with what we call mortgage serviceability, people's ability to pay their mortgage. The flip side of that, of course, is interest rates. And rising interest rates make a big difference to mortgage affordability. And that's going to be pushing in the other direction as we're expecting to see the interest rate rise later in this year.
Well, that's interesting because even you saw in the budget last week, the government really putting in forecasts at somewhere from mid-year, they're saying, until 2024. So some are suggesting 7-8 interest rate rises during that time. So people have almost got to think in their heads as they afford mortgages that they can cope with those interest rate rises that are coming.
Certainly, and I think we're starting to see that in buyers' minds, and that's part of why price growth is slowing. It's also worth noting that when banks assess your ability to pay your mortgage, they don't assess it at the rate that you're going to get when you start your mortgage. They add what's called a buffer of 2.5% to 3%, and APRA is very keen to ensure banks are undertaking those serviceability assessments in a very prudent way.
And so it's going to be interesting here because that's the big thing about where house prices, home prices go in the future. It's about the supply, but it's about that serviceability. They're the two keys, aren't they?
That's exactly right. And, I think one of the things we saw from the budget or didn't see from the budget was much on the physical supply side. So we had 2 weeks ago the review into housing affordability, talked a lot about measures to build more homes. We didn't see that picked up in the budget. Not surprising. There was a week between the review and the budget. Be a bit unreasonable to expect it. But we didn't see much of that picked up. I'd hope we do over the next 12 to 18 months.
Angus, I've got to tell you from REA Group, as always, great to chat to you here on the program.
Thanks for having me, Ross.